Hi there. I spent nearly 2 decades working with the Internal Revenue Service, and I love using the genuine scenarios I encountered on the job to help explain things clearly. Please keep in mind that while these examples are real, they are meant for general educational and informational purposes only. They should not be used as official personal guidance for your specific situation. Thank you for watching. Now, let's open the file.
Payroll. The money that wasn't theirs. The first check bounced on a Tuesday. Not the big check. Not the rent. Not the supplier payment. A payroll check. A regular paycheck made out to a woman named Lydia Moore, who had worked at Carter Home Services for 6 years. She stood at the bank counter with her purse tucked under her arm, her lunch break almost over, and watched the teller's face change. That tiny change told her everything. The smile disappeared. The eyes dropped. The voice got softer. "I'm sorry," the teller said. "There aren't sufficient funds." Lydia blinked. That can't be right. The teller slid the check back across the counter like it was something fragile. Lydia looked down at it. 2 weeks of work. 2 weeks of bathing elderly clients, changing sheets, helping people walk from beds to chairs, cooking meals for strangers who had become family. 2 weeks of work. And the check was paper. Just paper. She called the office from the parking lot. No answer. She called again. No answer. Then she called the owner's cell phone. This time, someone picked up. A woman's voice said, "Carter Home Services, this is Monica." Lydia sat up straight. "Monica, it's Lydia. My paycheck bounced." There was a pause. Not a surprised pause. A tired pause. Then Monica said the sentence that would become the beginning of everything. "Don't deposit it again yet." Lydia stared out the windshield. The summer heat shimmered off the pavement. "What do you mean, don't deposit it again?" Another pause. Then Monica said, "I need to talk to Payroll." But Monica was Payroll. That was the first lie. And it would not be the last. Because behind the friendly office door, behind the framed business license, behind the little sign that said, "Family Care with Heart," there was a secret hiding in plain sight. The company had been taking taxes out of employee paychecks every payday. Every check stub showed it. Federal tax withheld, Social Security, Medicare. The employees thought the money had gone where it was supposed to go, but it hadn't. The business had kept it, spent it, moved it, covered other bills with it, and by the time the IRS came looking, the money was gone. But the IRS was not. And when payroll taxes are withheld from employees and not paid over, the question does not stay with the business for long. Soon the question becomes personal. Who knew? Who signed? Who decided? Who paid the rent instead? Who paid the vendors instead? Who kept the doors open with money that was never theirs? And one morning, Monica Carter would open her front door and find a federal employee standing on her porch, not asking about income tax, not asking about deductions, asking about payroll. And payroll is different, because payroll has a memory, and it remembers every name on every check. Carter Home Services was not a giant company. There were no glass towers, no boardroom, no legal department, No accounting team behind frosted doors. It was one office in a strip plaza between a nail salon and a dentist. The sign was blue. The walls were beige. The coffee maker always sounded like it was dying. And on the front desk sat a bowl of peppermints that every client touched and no one ate. Monica Carter started the business after taking care of her own mother. Her mother had dementia. Then came the falls. Then the hospital visits. Then the nights Monica slept in a chair because she was afraid her mother would wander outside. After her mother died, Monica told everyone the same thing. No one should have to do that alone. So she opened Carter Home Services. At first, it was just Monica and 2 aides, then 5, then 12, then 23. By the 3rd year, she had clients in 4 counties and employees who called her at all hours. Someone was sick. Someone needed a shift covered. Someone's car broke down. Someone's client had gone to the emergency room. Monica handled everything. She answered phones. She hired caregivers. She met families. She cleaned the office bathroom when the landlord forgot. And every other Friday, she made sure payroll went out. Or at least, that was how it started. Then the business grew, and growth looked good from the outside. More clients, more invoices, more employees, more phone calls, more money coming in. But inside the office, growth felt like drowning. Families paid late. Insurance payments dragged. Clients changed schedules. Employees needed checks on time, whether the clients had paid or not. By the 4th year, Monica brought in someone to help. His name was Brent Wells. Brent was not an accountant. He was Monica's boyfriend. He wore expensive shirts, talked fast, and always seemed to know a shortcut. When Monica worried, Brent leaned back in his chair and smiled. "Cash flow," he would say. "Every business has cash flow problems." Monica wanted to believe him, because believing him meant she was not failing. Brent started handling the bills. Rent, insurance, fuel cards, office supplies, vendor invoices, payroll tax deposits. The last one was the quiet one, the one nobody asked about. Employees asked about paychecks. The landlord asked about rent. The insurance company asked about premiums. Vendors asked about invoices. But the payroll tax deposits, those were quiet. Until they weren't. Welcome to Behind the Scenes. Here's what everyday people don't always realize. When an employer pays an employee, the employee does not receive every dollar they earned. Some money is taken out first. Federal income tax, Social Security, Medicare. That money is not supposed to become business money. It is not supposed to cover rent. It is not supposed to keep the lights on. It is not supposed to pay the owner's car loan. It is withheld from the employee and held for the government. That is why it is called trust fund money. The employee trusts the employer to send it where it belongs. So when that money does not get paid, the IRS does not see it like an ordinary unpaid bill. They see employee money that was withheld and not turned over. That changes the temperature of the entire case. Because if the business cannot pay, the IRS can start looking at the people behind the business, not just the owner. Anyone who had control, anyone who could decide which bills got paid, anyone who had authority over the money, anyone who knew the taxes were due and paid somebody else first. That is where a business debt can become personal. And that is where Monica Carter's life began to split in two.